And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good afternoon, friends and traders. Welcome to Limit Up Podcast. I am Dan Hodgman.
And I'm Jack Pelzer.
Jack, how are you doing today?
I'm doing excellent. Just watching all these assets go in roughly the same direction.
Right. They're all looking about the same. Markets are down a little bit here today. My quote board is relatively red. No surprise, I don't think.
No, there's clearly been a move by the Fed to try and decrease asset prices, among other things. And I would say that they are succeeding. If that's what Mr. Jay Powell wanted to do yesterday, he accomplished that. And we'll dive more into that in today's topic. But
absolutely.
First,
let's get a quick breakdown of what happened in these markets here today. Crude oil stayed inside for the most part, opened up. We saw a nice little push up to $89, but ending our day right on the lows, right near where we our low off our open. We came down to $88 there. Now, no surprise here. I mentioned on the forecast, for those of you that weren't there, I am filling in for John Hoagland this week on the market forecast these last couple of days. It did exactly as expected. Hangover day, as I've always called it. These markets were a little confused after yesterday's big move, which Jack and I are going to talk about. But for the most part, down on the day. You saw a nice little pop in the S&Ps right after the open. It tried to get higher. It moved up to our short time frame 30-minute moving average, or 30-minute 20 EMA. And really just held there all day long until here at the end of the day, kind of a little bit of sell-off. And the NASDAQ, very similar. NASDAQ maintained a little bit lower day, nonetheless, still pretty quiet there. Gold, on the other hand, once gold opened up here today, it started to bounce off its lows. So it made its lows right before the open. And from there on out, it tried to grind higher. Did not get all the way back up to settlements right around 1650, but made an attempt. It's about $17 short of that at the moment. Euro, we saw the Bank of England came out this morning, raised their rates. Euro, not hugely impacted by that one, continuing this downtrend that it's been in for quite some time. The dollar to the euro, 97.80 right now. So pretty interesting there. And the 10-year note, that one gave a little bit of two-way trade off the open, rallies all the way up to high side of the deviation off of VWAP. That's one of my favorite things to look at. Bounces off that deviation, rolls right back down to VWAP. And then we get a nice little bounce once again. So some two-way trade in there based off of just some simple indicators to be looking at.
The NASDAQ is really converging back slowly to its overperformance since since the pandemic, since the recession then. It's interesting that what's really fueling that right now is somewhat of a rotation, not so much that the smaller cap things are doing better, just relatively better compared to the big boys are finally getting killed. So we'll talk about the Fed, but I just want to give a little update. I got my chart here where I am looking at the performance in 2022 so far. So starting at, the beginning of this year, I have Apple. We're going to the FANGs or whatever they call them now. Apple down 22%. That is the belle of the ball there. Tesla's down 39%. Google down 42%. Amazon 46%. Netflix 55%. And who is bringing up the rear? It is like Prince, the artist formerly known as Prince. It is the company formerly known as Facebook. Meta is down 74% since the beginning of this year. I was just thinking about this. I have not looked this stat up, Dan. Is it possible that this move in Meta has been the biggest destruction of wealth, at least on paper, of any company ever?
of an indestructible business.
Well, I'm thinking about it this way. It was only what, 5 years ago, somewhere around there where we had our first ever $1 trillion company, which was Apple.
It wasn't
And
even 5 years ago, I don't think.
yeah, it was, I don't want to look it up right now, but it was recently is what I'm trying to say. So given that Facebook was nearly $1 trillion and is down 75%, that erasure of $750 billion might be the largest loss of market cap ever. Maybe it gets beaten by the fact that Apple's so big that just being down, I have to look at it's close. But either way, that's a big shock to the NASDAQ, which is very heavy in those companies.
It's an interesting topic to bring up, Jack. I mean, and you think about it, here's where I look at it. What happened when the pandemic began? Everyone was taking their extra cash and they were investing. Like, I had friends of mine that had never had interest in the stock market were calling me, where do I invest? Tech stocks, right? Like, we know working from home environment, people are going to be at home. Tech is probably a good place to put some cash. There's some good opportunity. You saw a ton of companies kind of explode. You saw Peloton explode, and now it's starting to implode.
That's dead. Peloton's dead.
Jack, you want to buy my Peloton? It's sitting right there. It's basically, like new. I can put a new seat on it. I'll sell it to you for a good deal.
Maybe. I have an iPad and a bike. I can figure it out.
But so you had a lot of these companies that now that life has kind of gone back to normal, is that what impacting some of these tech stocks? It's tough to tell. I don't think, Apple, yes, they're a tech company, but they're selling a physical product. Peloton, yes, it's a tech company, but they're also selling a physical product. But Facebook, strictly tech, they're not selling a physical product, but now they're trying to sell a fabricated or a tech universe that you're living in.
Even worse. So similar environment, but different reasons. The reason Apple's doing the best is, as you said, they mostly sell a physical product, but they sell a whole lot more than that. I mean, they're talking about Apple is just out left and right murdering companies, right? They really maybe killing Facebook through their changes in the tracking policy and Google in that way, a bunch of startups as far as finance. So Apple's been sitting on $200 billion in cash for years, and now they're using it, soon on Apple Pay. You'll be able to, like, with any purchase you make, divide it in 4 installments at 0 interest or something like that. That's crazy. Crazy good. I mean, they're down. The whole market's down. You look at the others. You classified Google and Apple as tech companies. To some extent they are, but where they make their money is advertising. They're really advertising companies, the biggest advertising monopolies ever. When the economy starts feeling the pinch, the first thing that gets cut are marketing and ad budgets. And that is why they have both been annihilated. Facebook more so because, as you said, no one knows what the hell Zuckerberg is doing with this whole virtual Zoom meeting thing. I mean, maybe he'll have the last laugh.
I saw something recently. It was like some famous musician is having a concert in the Metaverse, and just like, I'm a younger guy. I'm a millennial, and I struggled to understand. Like, I'm not a boomer. I'm not that old, but yet I struggled to understand what that even means. Like, do you just log onto your computer and watch a concert on your computer? Why would I pay for that when I could just go to YouTube and get that for free with maybe a couple ads in between?
It's unusual to see a company so big, like working so much in sort of trying to build a new industry, trying to be a unicorn and build it from scratch. It's hard through this like adoption and creation phase it's just not. You're not going to have any people out there right now buying these super expensive headsets and doing it. Maybe that'll change very quickly,
Oh, is that you need to have the big face mask thing for them? See, I don't even know.
I don't even know. Well, that's the thing, because no one talks about it. It's not like, and maybe this is how the internet felt early in the day or something like that. I'm not saying that this is not the future. I'm not going to prognosticate on that, but I think that it's not the discussion everywhere, right? Like, I don't know anybody that does this.
Well, it would be easier if it was like easily explained. Like when Facebook launched, I remember when it launched, I remember to get access to it, this was what everyone talked about. Like, I remember going to college and them sending out like a letter in the mail, join Facebook to meet your new classmates. And it was like because you had to have a college email address to get logged into Facebook. And then it directed you right to people that were going to be your same age, your freshman year in college.
I was one of the first 5,000 to 10,000 users on Facebook because of my age exactly. The school I went to was like it was early, like it was one of the first 10 or 20 schools. And I happened to graduate high school, and the summer before I went in was when this all happened. If you've seen The Social Network, that stuff.
I have a buddy that was a guy I used to work with that was at Harvard when it all took place.
It wasn't one of the Winklevi, was it?
It was not. It was a trader
That
that I
makes
used
sense.
to trade with. That was at Harvard at the time, and I've heard the stories. I mean, it was wild.
It's a big swing. That is true that they're trying to do over at Facebook, but that's contributing to what's happening in the NASDAQ. The S&P right now has been much more resilient. We're still waiting to see who wins the $5 on 35 or 4,000 this time. We're kind of smack in the middle again. But the reason we had some acceleration in the last couple of days, I think it's worth talking about. We can get back to some of these tech things of why this sell-off is happening right now. And it kind of all goes back to the Fed yesterday. So you want me to start with this? So yesterday,
Go ahead.
Jay Powell announced the fourth consecutive 0.75 increase in the Fed funds rate up to 4%. That was 100% expected. And the equity markets rallied off of that information. But then came the presser where he was a little bit less dovish, more hawkish, however you want to think about it, than people were expecting. And it crashed. It was a 4 or 5% swing from where the NQ was until then. So the name of the game now, it kind of sucks to be stuck in this cycle, is now we wait for CPI again. Right now, the expectations people have for where this all ends are about 5.1%. So some people are thinking it'll go to 0.5% next time, 0.5% the next time, and then maybe 0.25%. But that's been adjusting like crazy. So any deviation from that,
you can't bank on it. And I'll tell you what, I want to talk a little bit about trading that number. It's something we have seen historically a number of times. We've talked about this a lot. Top Step recently dropped you can trade through economic release rule. Like, you 100% can. I'm not saying you can't do it. I will say, from a risk standpoint, I watched this yesterday, a number of traders trying to catch that quick move up and down, and watching them get in and out. And I contacted a couple to say, hey, let's just slow it down. We don't know where this thing's going, right? You hear a number. I spoke to some traders yesterday, like that I know outside of Top Step, like, hey, this number fundamentally, if they're going to raise rates by 0.75 of a basis point, that should move stocks lower. But what has happened the previous two rate hikes? Same thing happened. Market started to grind lower throughout the day. Number came out, it spikes. We didn't get the lower push down because the rhetoric afterwards was a little bit different, but we're seeing it here that this big move off the number is, classic. Hey, we think this is what's going to happen. It actually happens as expected. Holy cow, here comes volatility. No one really knows where this market's going to go. So being patient when these numbers come out is key.
Can I pick your brain on that? When you say, because I don't see the risk board at the time, when you say they're trying to do a quick trade off the Fed number, can you give me an example of like what they're trying to do? Are they holding it through it like a gamble, or are they waiting for the initial move and then what? Are they fading it, going with it?
Just trying to catch that momentum move, right? Like we know at 1 o'clock yesterday afternoon, volatility was going to hit. And what happened on the number, it shot right down. I mean, NASDAQ was down 50 points in like 2 seconds. So the initial instinct is, oh, it's starting to go lower, sell, sell, sell. And they're chasing it down. And by the time they get their fill in, the market now starts to bounce, and then it's rallying higher. And we're looking, if you're looking at a 30-minute bar, it doesn't look too crazy.
Mm-hmm.
I mean, it's crazy enough, but like if you're looking shorter time frame, you're seeing these more pullbacks in and out, and catch yourself chasing, and it just eats up that P&L. So I've always said it this way. There are two things that happen after a number. there is the emotion to the number, and then there's the reaction post emotion. So you get this emotional blip, and then, okay, here's the number, here's the information we can now digest, here's the reaction. And which is what we saw. If you look on a 30-minute, you saw the first 30 minutes ripped higher after the number. That was this emotion, like, oh my gosh, it happened as expected, start peeling stuff off. And then boom, then the reaction. Okay, now we're hearing Powell talk. It makes sense. Market should move lower. Now we can sell. And that's really what happened. And if you catch yourself chasing that, that's where you really start to struggle. It's like, you're saying, here's the top, I'm buying. I mean, I'm going to sell it on this push higher, or I'm going to, pick and pop tops and bottoms. That's what happens when you're trying to chase that momentum. It's really hard to be successful in an outright position on momentum trades.
That's a tough trade to make for many reasons, but I think my biggest guidance, so to speak, there would be if you're trying to wait for the initial move. So before you could even click on things, there's all these tape reading algos that are going wild back and forth. To make that work, so it moves down, you're going to try and sell it right away. Okay, so the moves initially already happened. Is you're going to need a huge continuation on that to make that work. One that's probably unlikely. I don't know what it would be, how many times out of 10, but an unlikely that it'll just go shoot down and then go the 100 points or whatever you're going to need to make that trade work. And you got to remember, it's almost sort of like thinking about like volume profile or something like that. In the initial seconds after that, all of the big institutional money and other stuff, they're kind of sitting to wait to see what happens. And so while there may be like a huge move, it's not like that many contracts actually traded right away in that time, as opposed to, say, during normal liquidity, if you were to wipe through 50 points. So price discovery wise, it's really unclear where that's going to end up. You have no idea what other products, most algos and things like that, are hedging in other markets, or like auto spreaders that I used to work on. So you could just be seeing the artifacts of people hedging positions very quickly, not caring about price, and not really what the actual move is until it starts to fill in.
You're spot on, Jack. You're talking about not caring about price. What happens to a large position trader when the market moves 10 points? Their job is to hedge their position. They have a system that says, if the market goes up 10, buy another one or sell another one, but depending, their net overall position. So they're not going flat just because an FOMC number is coming out. They are trying to be as delta neutral. And so their job is to expand how many, or to minimize how many buys and sells they have to make for every 10-point move. Or if it's a, bonds, it's a 1 tick move, right? Like how much you actually have to buy and sell. So you want to keep your delta as neutral as possible, so you're doing less activity. But when a market moves, looking at the S&P right now, that market moved off the number from 3840 up to 3900. So you've got a massive move, quick up and then a quick down. And they don't care about the price because their job is to maintain delta neutral. They're not looking to create this big windfall profit on that number. It's strictly, I have to manage my position. Market's going up. Okay, that means buy another 5, buy another 5, buy another 5, or maybe it's sell another 5, sell another 5, sell another 5, because as the market moves, depending on if you're net short or net long, it all varies, but that's all that's happening. They're not looking for big trade. They're waiting for this market to determine where it's going to go based off of the information it's received. Those initial moves are not information received. Jack, you talked about it. Let me ask you this. When you were managing those algos and those automated software numbers like this, what is one of the things they're taught to do in those systems? They're so smart. They're taught to, on big volatile moves,
They drop out. Yeah.
Yep. That's exactly what's happening. They're dropping out, and they are that's like the market making that's in there these days.
We never held, you would never hold, the only positions that you would hold through the Fed. And granted, I was doing this at a time when overall volatility was lower. and interest rates were lower. Lack of volatility was the problem. But even then, the only things we would hold were either very, very short duration spreads that don't move a lot. Think about like the 2-year basis, or small positions in butterflies that were theoretically hedged mostly for outright risk and hedged adequately for curve risk. There's no reason we were a big trading firm. We wouldn't take speculative positions through a number like this, because anything can happen. And if you do, go ahead.
No, go ahead.
And if you do, it kind of brings to the second part of the Fed trade, is you're doing something I don't like to do, which we talk about not trading right towards the end of the day if you have to get out, because the time limit is not a good thing to have. If you are trying to trade right up that 1 p.m. number and go with the move and do it, you don't have long for that to work out, because if you're smart, no matter what, you're going to dump it before the presser that comes, what is it, either 15 or 30 minutes later, because that's going to be another unpredictable thing that could send it both ways. So you're essentially betting that I'm going to do this right now and it's got to work out shortly.
Right. You're not giving yourself an opportunity for that trade to actually play out. It has to either work or it's not going to work. And how are you managing your risk in that?
Yeah.
Right. Like one of the biggest things for developing as a trader, and every trader is always developing throughout their entire career, is to trade strategies that are repeatable. Trying to trade during a number is not going to be repeatable. That creates these momentum or FOMO moves. Jack, talking about you guys going flat and trading certain things, how we would handle this, which I think is an interesting back and forth. When I had a number coming out, we were usually pretty neutral on our delta. And again, we were options traders, so everything was based off of our Greeks, right? Determining what our risks were. And our delta was telling us, this is what it is if it moves up here and moves down here. We understood our delta. So I would spend 10, 15, 20 minutes before that number stacking my order book on either side, because I know I can't keep up with it, but I don't want to be chasing the buy all the way up and then get a bad buy up top and then have it break out to the downside. So I would stack my order book and say, okay, I need to buy 3 every 10 ticks. And so I would buy 3 every 10. I would set it, and I need to sell 3 every 10 ticks to the downside. And I would set myself up that way. No matter what happened, I was protecting my capital, protecting my risk, and not trading it because the number happened. Rather, I have to protect myself. And I know every 10 ticks, I have to buy or sell 3. It was as simple as that. And I'd let it happen. And you'd hear the computer, I had order filled, and it was like chasing, and it was talking so fast, and everyone would hear it, and you'd hear it from every computer around.
Yeah. Those were kind of hectic times. I do think for people who are trading outrights out there, if you're going to trade, it's one of the few times I don't usually like the afternoon as much. I think that if you must trade on it later in the day, at 2 or 3 o'clock, I don't hate the idea of going with whatever move is happening around then, as long as you are going to, hold it for a good multiple of reward versus risk. They do, I think it did some yesterday, they do tend to, I feel like, drift at that point, but it's the time right around there between say noon and 2 or whatever that I think is kind of a dangerous time to be trying to do anything like that.
Oh, 100%. Just be patient. Like, it all comes down to one of the best pieces of advice my dad ever gave me was no one trade's going to make or break you as a trader. And that goes to one day. No one day is what's going to, either end your trade. Don't ever let it end your trading career, and don't let it ever be the day you talk about forever. Don't have that mentality. And FOMC days, if you're an equities trader or a treasury trader or heck, a gold trader or a euro trader, like we can go across the board.
Most things, yeah.
Those Fed days, you don't know what's going to happen. And is it worth the risk? I can honestly sit here and tell you, for me, trading outrights, it is never worth the risk. And I'll sit on my hands all day on those. I don't mind.
I agree. I've seen people just blow up spectacularly on those days with position sizes you wouldn't think you'd be able to do that on. I remember doing
Right, I
like
mean,
the
look at it.
Operation Twist. So people just getting exploded.
Like S&Ps went from 3,900 down to 3,780 in a 30-minute span. Less than 30 minutes, it made that move. I mean, excuse me, less than an hour, it made that move. Excuse me. That's that's a lot of move. It's 120 points in the S&P to rip lower like that. And yes, you can get out right by that half hour, a half hour after the number, things are a little bit more liquid. But again, emotions take over, and maybe you end up saying it's going to come back. It's going to come back. You don't know how you're going to react in it. And there's nothing wrong with sitting your hands. Now, again, I'm not saying don't trade it, but I'm telling you how I would handle it, and I would not trade it.
I feel like I'm having a little bit of a brain fart here with the scheduling of the Fed. They don't usually do these meetings at this time. Is this like a November type thing, or like don't they usually
They're
meet
every 6 weeks?
Every 6 weeks. That's what
every
it is.
6 weeks. Yeah.
Yeah. So we get the relatively rare on the year calendar combo of the unemployment report coming out tomorrow, right?
Yep. Unemployment's tomorrow.
That'll be a big one too. I don't know off the top of my head. The Fed they're not even allowed to know it in advance, I don't believe. It's just the Bureau of, I think they siphon people off. I knew someone who used to work for the BEA or whatever, and it really is kind of cordoned off where you're working on something, but you don't know how it's going to input anything else. They really try and keep that under the radar.
Oh, 100%.
So
I know a guy that used to do work on it too. Wild stories hearing about it.
Yeah, it's cool. We'll see what happens. That's our first taste, because now the next two big numbers is we have that, and then we kind of got to wait for CPI, which I mean, Powell's been beating this pretty hard, I would say. I'm wondering to see when the data is kind of backwards looking in some ways, but I feel like at some point there's got to be some progress being made at some point.
We'll see.
Right?
It's inevitable, right? I mean, keep in mind, we are now approaching close to that 1 year mark of super high inflation numbers. Obviously, inflation's been up for the last couple of years, but now we're starting again. We look year over year, so
that'll whipsaw pretty quick, right?
Yeah.
Because it happened pretty quickly, so that'll go down. I mean, I think they're mostly probably. I'll be looking at the month to month stuff like that, and who knows? The data's been so hard to get to the upside. Who knows if other weird stuff will happen? I am just fascinated for this unemployment number, and then CPI coming up.
CPI is the one I'm less interested for me personally in unemployment as I am for CPI. CPI is the one. That's what, it's been big reaction number for quite some time. And I would say not to discount any of them. When these numbers come out, just get flat, like trade before them, maybe trade after them. But when they come out, we don't know. We can have an idea. We all knew yesterday Powell was going to increase rates. We all knew that was going to happen. Like there's no question about it. And pretty confident it was going to be close to 75 basis points. Again, pretty understood, but we don't know how that market's going to react.
You might be able to pull some voodoo on a sim, but like say, I'm just going to take a bet and keep a tight stop on it. And,
Right.
I'll lose a little or make a ton. That doesn't happen in real life. Like maybe it'll work on a sim, but I agree with you. I would stay flat outright and then wait a little while, let it digest, and then feel free to generally go with that trend.
Without a doubt.
All right. Well, that's all I got for here today, Dan. Anything else we have to announce as far as Top Step?
No, I just say get out and vote. Everyone's, we got midterms, so get out.
Oh,
there and
that's
vote.
the other big thing. There'll be a lot of beware. I forgot all about that. Beware. I don't know, unless it'll probably take a little while, but beware of some of the moves. Historically, those moves tend to reverse and stuff. People
all overnight stuff.
Yeah.
What is it? Monday? Is it Monday?
Tuesday is the election.
Tuesday, excuse me. Tuesday night, you're going to hear whatever news channel you're watching for results. They're going to talk about the markets the whole time.
Yeah. And we won't probably, Unless it's a big off one way or the other, we're probably not going to know a ton until very late that night. But something to be careful about, especially if maybe you're outside the US and you're not familiar with the wacky ways we do things here.
Speaking of outside the US and inside the US, another update. I know the outside the US, Europe in particular, because I had a meeting with someone in Europe today, and their time zone already changed. United States hasn't. We are changing this weekend. So roll those clocks back a little bit so that you're not caught trading when you don't want to be trading.
That's good info there. So great. Can't wait. It's going to be dark at 4:30 in the afternoon in Chicago after that. So I'll make the best of it. So thanks for listening today or watching us, as it would be, everyone. Sorry for the stream trouble earlier, but that's just what happens when you're in the workplace environment virtual. We'll be back next week with something new for you and maybe some breakdown of what happened in the midterms. Not from a political standpoint. There's a lot of people doing that. We'll just talk about. We'll talk about like 3 futures products and slinging outrights. It'll be good fun. So we'll see you then. Namaste. Trade well.